Let me ask you something. Do you feel richer today than you did a year ago? Because according to the Fed's latest Z.1 report, you should. But here's the kicker, you probably don't. And today I'm going to break it down why that is. So, if you want to understand how wealth is really distributed in America, stick around. Before we dive in, hit that like button and subscribe because trust me, what you're about to hear, you won't find it on CNBC. In Q2 of 2025 alone, the US household net worth jumped by 7.1 trillion. Yes, guys, trillion with a T, not a billion. That's right. That is $79 billion per day for 3 straight months. Imagine stacking $100 bills. In 3 months, US household stacked enough wealth to reach the moon multiple times. But here is the twist. When we say households, who are we really talking about? Is it you, your neighbor, or the top 1%? If the country is adding $79 billion a day in wealth, why do most people think they're falling behind? What would it take for that daily wealth creation to actually touch the bottom 50% of Americans? If these numbers already have you questioning the system, smash the like button because it's about to get even crazier. The total number is jaw dropping. Household net worth hit a record $176.3 trillion. That's more money than any generation in history has ever seen. But what's interesting is the speed. That is 7.1 trillion quarterly jump. That is the largest since pandemic recovery. So the question becomes, what is fueling this? Is it productivity, higher wages, stronger growth? No, it's mostly assets, stocks, housing, financial markets, you name it, which leads us straight into the actual problem. If the wealth comes from asset prices, not wages, what does that say about the future of the middle class? Can an economy really be healthy if the 90% of the people don't feel wealthier when the numbers say they should? US population's net worth is now almost 581% to be exact, of US GDP. That is highest since early 2022. Now, why does this matter? Because when wealth rises much faster than the economy itself, history tells us it does not end well. It usually signals bubbles, growing inequality, and systematic imbalances. Now, here's the question for you. What happens when the stock market does all the heavy lifting, but the wages and real economy lag behind? You guessed it, the gap widens. What happens when the paper wealth grows 5 times faster than the real economic output? Do you think we're headed towards another bubble? If so, where will it pop first? Now, drop your thoughts in the comments because the next part is going to make you even more uncomfortable. Now, let's get real. The bottom 50% of the US household, yes, I said the bottom 50%, they hold just 2.5% of the total wealth. Meanwhile, the top 1%, they're sitting on 40 trillion more than the bottom 50% combined. Now, hear that again. One group, just 1% of the population, has 40 trillion more than the half of the country put together. And guess what? Rate cuts are coming, and when rates fall, who benefits? Is the asset owners. It's the wealthy. The rich get richer again. Now, do you see the pattern forming? If the bottom half owns just 2.5% of the wealth, what hope do they really have of catching up? Do you think rate cuts are designed to help everyday Americans or to protect Wall Street? If you're starting to see the pattern here, hit like and let's keep digging. Here where it gets really ugly. Rate cuts are coming, but inflation is still running above 3%. And a record 70% of consumers believe their income won't keep up with inflation. That's 7 out of 10 Americans already expecting to lose ground. So what happens? Inflation rebounds. Asset prices, stocks, housings take off again. And who reap the rewards? It's the top 10%. If 70% of people already expect to fall behind, what happens to the faith in the system? At what point does the average American stop playing a game that feels rigged? This isn't trickle down economics, it's flood up wealth accumulation. So let's recap. Household net worth is exploding, but mostly for the wealthy. The stock market is powering gains, not wage growth. The bottom half of America is stuck holding the crumbs. Rate cuts likely widen the gap even more. The Fed's Z.1 report doesn't show the numbers. It shows a story of imbalance, opportunity, and risk. So I'll leave you with this. If the system keeps rewarding asset owners, where do you want to be? On the sidelines or holding assets? Because, like it or not, that's the game. And the gap is only widening. Think about it. If this presentation made you think, smash that like button, drop your thoughts in the comments, and hit that subscribe so you don't miss the next deep dive. Because trust me, this story is only just beginning.